The jobless rate will hit property. Let's have a look. Hello everyone, I'm Florian.Heise and welcome to another episode of HeiseSays. I thought we'd have a look at this article from Yahoo Finance regarding the jobless rate and how it will affect property, but not as we will expect. So this is quite interesting. What do you all think before we go into this? Because we've got the jobless rate. Right now unemployment is sitting at, and I'll bring up the right thing for once, we've got it sitting at about 7.1%. Now, I like to make reference as well to the Roy Morgan unemployment figures, and we will just jump here and have a look at that if you're not familiar. Now, this is an alternative unemployment measure. We can see here their unemployment and underemployment. If we scroll right down to the bottom, they've got unemployment at 14.8%, much higher than the 7.1 from the ABS, and then underemployment at 9.7. So the combined underemployment and unemployment rate, the underutilization rate as the ABS would call it, is at 24.5%. Quarter of the workforce. Now, I prefer their methodology here that they use in the survey, but I mean, it paints a pretty grim picture, doesn't it? We're either looking at 7.1% unemployment or 14% unemployment. The rule of thumb that I've learned now that people tell you is just double the ABS and you get the real unemployment rate, which, yeah, is a bit sad. I mean, think about it. Working 1 hour during the survey period, would you consider that employed? The ABS would. I'm not kidding. So in the last week alone, Qantas announced cuts of 6,000 staff. The ABC announced cuts of 250. Deloitte announced it would fire 700. And unfortunately, this sort of jobs bloodbath has been the norm for the last few months. Between March and May, the ABS labour force data showed 835,000 fewer people were employed. And in another article we looked at more recent data, 980,000. 980,000 jobs gone, everyone. According to CoreLogic Australia, Head of Research Eliza Owen, surging unemployment will have an impact on property prices, but not as might be expected. As with the GFC, structural changes in the economy amid the pandemic are likely to see the unemployment rate elevated for some time, Owen said. Businesses are likely to struggle to rehire staff in the short term, as their liquidity is increasingly constrained, and a period of social distancing may have forced businesses to transition to less labour-intensive operations. Or entire industries will be decimated, like tourism. Essentially, businesses that have discovered they can operate with fewer staff members will not be incentivized to rehire team members, Owen said. Well, yeah, I mean, that's the thing. That's complete common sense. This suggests that over the next year or so, lasting loosened conditions in the labour market could dampen demand for housing. With the cash rate now at record low, recovery in income and jobs will be necessary to increase purchasing capacity. But the breakdown of unemployment figures also suggests the blow to the property market could be limited. That's because the majority of those who lost work, 59.7%, are in part-time work, with people aged 15 and 24 also making up 40% of the new jobless. We've only just seen the beginning of the recession. Okay, so this initial job loss may have a limited impact, but as the economic consequences of these people spending less, these people demanding less services, and other people losing their jobs, and then maybe having to be forced to struggle to meet their mortgage repayments, professionals not getting work, and then more forced sales starting to enter on the market, or people just selling. What about all the people with their Airbnbs? Is this cherry picking, everyone? What do you think? Is it cherry picking? As Owen noted, most first home buyers are between 25 and 34, a group less impacted by the unemployment wave. And, oh crap, and they're doing everything they can to prop up first home buyers to get them in. Additionally, ABS analysis of payroll data suggests the biggest declines in employment by sector are across tourism, accommodation, and the arts. Workers with these characteristics are less likely to hold mortgage debt than older workers in industries such as professional, service workers, and the trades, Owen added. She said that while the economic impact will be significant, it will impact the housing market indirectly, even if those in the most affected industries are less likely to own a home. That is because they are more likely to rent. So the current declines in employment will likely have an indirect impact on housing prices through weaker rental demand and downside risk for higher rental vacancies, lower rents and deteriorating yields, Owen said. Don't worry, the Reserve Bank will just shut down the entire real estate market so people can't sell. They'll keep it going. Then the government will. They'll step in. They'll guarantee more home loans. Maybe they'll start guaranteeing people's rent. You only need to pay 5% of your rent. The government will pay the rest. I shouldn't have said it, should I? I shouldn't have said it. Then it becomes reality, doesn't it? It's definitely a clown world we're living in, everyone. The Reserve Bank has indicated on multiple occasions that improvements in the employment market won't be as simple as waiting it out, she added. Re-employing those who have lost jobs will require greater innovation and education reform. Based on recent data, such policies will also play an important role in increasing housing demand. CoreLogic will release its housing data for June next Wednesday on the 1st of July. Home values fell 0.4% across Australia in May, the first decline in 11 months. So this is an interesting one. You know, unemployment that's gone up will only indirectly affect housing due to the rental market because all the people that have been hit don't own homes, which kinds of, I doubt that for the 6,000 Qantas staff or the ABC staff or the Deloitte staff. I'm sure all of them would own homes. I'm sure some of them would own several homes. Seems like putting their hope in one basket. I mean, this is the thing. We're only seeing the beginning of the recession. You can't make future predictions. This is probably what they're talking about is the initial impact of this. Once the people have the reduced rent and they may also lose their job because of the greater economic impact, then we'll start to see the flow on. Or do you think this is 100% right and the economy will bounce back? What about all the other economies around the world that are also predicted to have hits to their GDP? Those that we're exporting to. China, Japan, South Korea, all of Asia. What about the fact that international tourism is going to take a hit? Or already pretty much has. It's a dead industry. $60 billion of our GDP is coming from tourism. That's bigger than iron ore, bigger than gold, bigger than coal. That'll have a demand for, that'll reduce the demand for Airbnbs. That will increase more property on the long-term rental market. That will suppress the rents there. That will flow through. Here's the thing. This isn't going to happen quick, everyone. I don't know why I'm holding this little pencil here, but it's not going to happen quick. It's going to be a slow, drawn-out process. The Great Depression took some time, took a couple of years if you look at the market tracking down. And I think making these predictions, maybe this is just the first step that we have to see. We need to keep an eye on it. What do you think, everyone? Where do you think it's going to head? Do you think unemployment will have an impact on property? Do you think it won't? Do you think people should jump on board those FOMO articles? Get into property now while you can. Jump on board right now. Take advantage of that government guarantee. Take advantage of that grant. Don't worry, you might lose your job. Don't worry at all. It's, I mean, really, sadly, you just got to laugh at this, to be honest. I mean, a lot of people it's going to be tough. It's going to be hard. There will be opportunities coming out of this. For some people, this may be the first time in their life that they've been able to actually take a step back and reevaluate. And think, why have I been on this rat race? Why have I been grinding on this treadmill? Why am I bothering to keep up with the Joneses when I don't even like them? Why am I going into debt upon debt upon debt for useless crap that I don't need? I think some people will learn the investments they've made in their consumer products are essentially worthless, particularly when they try to sell them. As always, please let me know your thoughts and opinions in the comments below. Like, share, and subscribe to the channel. If you're a fan and want to support the content I create here, there are a few ways you can. You can join the channel on YouTube or Patreon. You can support us via using our affiliate links at Amazon or eBay or Independent Reserve and Kucoin. You can buy our merch from HeiseSays. You can support us using Gold Pass or via PayPal. Thanks, everyone. I'll see you next time.